my name is Tofpik. I'm Head of Technical Analysis and Senior Market Analyst at ADM Investor Service International Limited. And here is your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. I'll start with Paris rapeseed. The neckline, currently 5-hour even, has been mostly very supportive as an uptrend. I know I am optimizing beyond possibly what may seem reasonable, but please bear with me on this. If we set aside the island bottom in June, then we've had 5 touches of this neckline so far. The most interesting recent action since early July has been the attempts to push down through the congestion from September 2012. That's between 519.5 and 513.75, and a failure to do so on a closing basis as well. Meanwhile, on top, the market, until today, had recently been capped by the projected 50% Fibonacci line of 548 on a closing basis. So what's going on? Well, there are one, maybe 2 patterns that seem to be emerging, and they are big ones. The larger is a March to date ascending triangle pattern. This one includes the island bottom in the pattern, and it has the upper trend line currently at 561.25, a little over the July high. The lower uptrend trend line, currently at 492.75, is below the medium moving average, currently 509.25. The second pattern is a more shallowly bullish pattern. It is to look at the neckline again, excluding the island bottom, as a possible lower bull channel line, with the upper bull channel line being the same connected high as previously mentioned. Both patterns are currently bullish, as the island bottom dealt a severe blow to any bearish incentive. Hence today's action is very timely, as we have formed a key reversal up today. Though there is a catch. You see, we also formed an indecisive spinning top today as well. Hence, I'm wondering which will trump the other. Right now I'd favour the key reversal up, especially as it has closed over the 50% projected Fibonacci line at 548 even. Winnipeg canola. The connected optimized tops to the recent highs in June and July gave us an upper channel or upper expanding wedge line. The lower channel, come wedge line, was the uptrend for the same period. This drawn bullish channel, bull channel, come expanding wedge pattern, was not sustainable. So I was fully expecting soon to retire it or redraw it. However, the way the market seemingly sauntered out of it in a sideways motion over the last 3 weeks is, I confess, somewhat perplexing. I said 2 weeks ago. So overall, I am not sure what patterns we have running. They currently seem hidden to me. I do know that there is a significant congestion below now between 760 to 820, containing interesting looking moving averages as additional supports. And we have another smaller band between 702 and 729, in which the long moving average, currently at 725, is about to enter. It did, and it's working its way through it, and that's the end of the quote. It seems I'm not the only one who is at a bit of a loss as to what is going on. We've had a sideways market since breaking out the ascending expanding wedge pattern, and I suspect it is more to do with indecision than with balanced forces of the bulls and the bears. This has also caused me to remove target X below, the potential target on the downside for the expanding wedge pattern. You may recall last time I was brought kicking and screaming to place that target despite my many misgivings about it. I'm glad that it is now gone. Bursa Malaysia crude oil, palm oil. The basing action I'd highlighted back in June eventually led to a bull channel of sorts. That's currently between 462 even and 52.05, which is off the top of the chart. Sorry, that's why it threw me. Last week the market broke out below the lower bull channel line, but then did an odd thing. Rather than either falling away as a bona fide break lower or move back within the bull channel, thus indicating a possible false break, what the market did was slide along the underside of the lower bull channel line. Now I also have a bullish Andrews picture for the 2021 action, and the middle time, currently at 44.94, seems to be acting as an attractor of sorts for this market. This bullish Andrews pitchfork has been a bit of speculation on my part, as apart from the previously mentioned bull channel, there seems to be, on the surface at least, no clear pattern I can easily see, either on the upside or the downside. Now I guess I would just have to wait and see. Yet there is one thing, something that has shown up a little clearer last time I spoke. We have a potential bow tie formation of 3 of the moving averages. Notably the short moving average currently 44.26, the short medium moving average currently 40.32, and the medium moving average currently 40.84. Now before you get too excited, the entry of the 3 moving averages, well, they're in the wrong order for either a bull or bearish bow tie formation. It is just messed up. However, that being said, the crossover is still there. Okay, so in a bow tie formation, the 3 moving averages come together to a single point and then spill out, thus looking like a bow tie, an idealized bow tie. The next thing is that the bow tie formation sees the market move in the direction of the way the moving averages exit the bow tie. Ideally, here it looks like upwards, but things can change before the timing is over. Thirdly, and this is important, timing. Timings between 15 to 20 trading sessions after the crossover. We should expect to see the start of a move prompted by this bow tie crossover. Personally, I'd settle for some greater volatility to show it works. But anyway, in this case, the crossover happened on the 23rd of July. Therefore, between the 13th and the 19th of August, we may see the results of this crossover. I would extend it a little to between the 13th and the 20th of August on the far leg to make, or taking into account holidays, etc. that we've had. So, from tomorrow onwards until the end of next week, we may see the start of a move and possibly of a direction. Watch this space. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.